It's Bank of America's dire warning. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, Bank of America warns that this will cause all hell to break loose in the markets, and we're going to show you what Bank of America says is the trigger point that could cause U.S. equities to come crashing down. And that's why every Sunday we like to look at the technicals, momentum, and machines positioning to not only help you be a better trader, but investor too, which is why we're going to show you how to use the information to better manage your 401ks and your IRAs. That's your biggest assets. Plus, we have a sponsor for today's show. We'd like to introduce Burcon Nutraceuticals to the show. You can find them on the TSX under symbol BU.TO and on the OTC under symbol BRCNF. And they are a global leader in plant proteins, and they just had some big announcements that we think are going to drive their revenues and their stock price higher. If you're a technical trader, you're going to love this setup. We're going to show you how the stock can move 26% in a flash. It's done this twice recently, and a bigger move when the shorts get crushed all the way up by 78%. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we picked today's story up with a headline, Bank of America's heartening, and this guy is one of the leading analysts in the world, says that U.S. mega caps to lead stocks. Well, that is until rates bite, and he's warning that the largest 10 U.S. stocks are at a record 34% of S&P market cap, and what that means is everybody owns the same stock, and when it comes time to sell, well, when everyone sells and there's no buyers, that's what he's warning here. So keep an eye out. Here's what he said is the issue: the concentration will remain intact until real 10-year yields, that's inflation adjusted, adjust to reflect the true cost of funds, rise to around 3%. Now, what would it take to do that? Well, that means, of course, rates could go higher and inflation down, or you could see rates and inflation both go higher. That's what he's warning about. When that happens, he says it's going to cause equity markets to break and threaten an all-out recession. Elevated bond yields adjusted for inflation, seen as a proxy for tight financial conditions, he says, are a common way for stock market bubbles to burst. Challenge here is everybody's all in the same scenario, and the market is only positioning for a no landing. There's positioning for perfection here. And the strategist wrote, referring to the bet that interest rates will stay higher for longer while economic growth remains strong. He says it's positive for risk, especially cyclicals, but he said if inflation comes back, it'll be negative for risk assets, trigger volatility. He says look at cash, gold, and commodities, and we'll take a look at some of those today and help you better position. But now let's head over to Goldman, because we like to look at the machine positioning every week, and this is important because machines drive a lot of money in the market very quickly, and when they buy, you want to be ahead of them. When they sell, you want to be out before they do it. Here we can see the tactical flow of funds report, and the question coming in this week was that enough? Was enough equity exposure reduced last week? The answer, he says, well, is no. And you can note here that 82% of the S&P 500 will report by May 3rd. That means the blackout window for corporate share buybacks coming to us in soon. Most companies are now out. Here we look at the CTAs. These are the machines, and what they do is they trade based on price level. They are very fast moving, and there's some very slow moving. Now, most of the money is on slower moving machines, but here we can see, looking over the next week, they're starting to take profits for a second time. They're net sellers over a week, and even in an up tape, in a down tape, they're fairly big sellers, around 70 billion of global equities, half of that coming out of the U.S. market. Here we see over the next month, well, in a flat tape, they are net sellers, meaning stocks go sideways. They return into buying as stocks go up, which you've seen kind of late last week. And in a down tape, they are massive sellers. This is the big risk that when we talk about what BofA's hardening is suggesting, you start to see a trigger point that not only causes everyone to want to sell, but the machines too, and that's how you get some massive, large moves down in the equity market. But one place we're not going to see that yet from is vol control strategies. Volatility didn't get high enough to cause them to delever, but watch out. One day that will happen, as the same with risk parity portfolios. They remain very long this market. And that is constructive to keeping prices. And here we see on the authorization front, now referring to corporate share buybacks, 2024 year-to-date stand at $317.4 billion versus $377 for 2023 year-to-date authorizations. We expect to see authorizations this year finish higher, but of course, nobody knows for sure. But keep in mind, if everybody is believing that corporate share buybacks can continue to drive the market, remember, if their authorizations are indeed dropping, and they're buying at higher and higher prices, well, it means they don't get as much movement for their money. Now, let's take a look at our screens here for momentum. We'll start with the S&P 500. Now, if you're thinking about this from a trade perspective, we've seen some machine positioning move. Now, you notice we have this line down here. This is our mimic of the CTAs. We have a fast algorithm and a slow one. Our fast algorithm is moving in a big way, but momentum remains negative. Now, from a technical perspective, we've seen the RSI, or relative strength index, come off oversold territory. The MACD's got a negative cross and is about to make a positive one, and this will trigger some technical buyers. Now, if you're struggling with coming in late and out early on a technical basis, we have our Momentum Timer Pro report here, and you see it has 11 consecutive daily sell signals. Now, what's unique about it is what we do is we aggregate all these signals and run a proprietary overlay. So if you're looking to get into the market, you see two important signals here. Machines are covering on those quick moves, and technicals about to switch. You know we don't have position yet. Now, what we do is when we see the technical signal slip to a buy off this machine positioning that's moving up, we will add a position here. Upside target, all-time highs. Downside target, that would be the 100-day moving average. Let's take a look at the S&P. Because if you're thinking, maybe you took some money off the table here with your biggest assets. Maybe you're looking to trade back in. Now, notice the volume profile. This is where most shares have been traded over the last 6 months. This is support way down here. Intermediate support, there's your 100-day moving average. But let's zoom in over the last 10 days. And what do we know? This dip here was bought in a big way. You can see at 504 here was the price on SPY. So we see machine positioning, our report leading what Goldman says could be some buying later. And then from a technical perspective, you see the MACD hasn't made that cross yet. So technical investors are waiting to see if it gets rejected here at the 21-day moving average or into the supply zone above here. Otherwise, look for a retest of the all-time highs. But of course, as B of A notes, that is a warning sign. If we see, of course, real yields go up, that all hell could break loose. Of course, we'll give you the tools ahead of time. Links in the description below. They're a 30-day free trial for both of our reports. You don't have to be a trader. Just could be an investor. While you're there, check out Burcon Nutraceuticals on the TSX under symbol BU.TO and on the OTC under symbol BRCNF. Let's take a look at the tech stocks because these are important. When we look at tech, what do we see is a lot of people, of course, companies that are going to be buying stock back in a big way. Momentum is still negative here. But again, we note the RSI is rising. The MACD is about to make a positive cross. Machine position, you see here on our fast algorithm, buying. On our slow algorithm, where most of the money's at, is buying. What's the advantage here? We run a historical overlay. We actually lead the machines, give you the edge. Buy before they do and sell before they do. That's the tip that we give our subscribers, and you too can be one of them. Let's check out the charts here and see what's going on for Qs, because what we know is a volume profile here. You saw a lot of people start to sell out of here over around this 437 mark. Now let's zoom in over the last 10 days, and what do we see? The buying just hasn't quite got there where we're seeing a breakout. Now, what we do know is, of course, these corporate share buybacks do come online, so look to see if that continues to push tech stocks. If it does, what you're seeing here from your biggest asset, your 401k or IRAs, if you took some money off the table, you can make a short-term move back in here. But again, keep an eye on real yields. It's very important, but what's notable here is these dips are indeed being bought, and that's important. Now let's check out small caps. Many people have asked, will you cover that? And yes, we are now. Here we see momentum negative on the Russell 2000. RSI again coming off of oversold territory. Same with the MACD. Now you don't have to follow all these. Just follow one report. We can tell you here. Look at this. We see a max sell signal on the 1 month. This is huge. And what's happening? We're going to see a technical shift here. We're seeing buying covering off of our CTA Time and Pro report. This is going to give you the edge on knowing when to buy. When you see this coming off as short covering and you see a flip on the technicals to a buy after a max sell, that is a huge signal. Upside target here, we're looking at the 50-day moving average for the first initial move here, because a lot of these smaller companies are going to be reporting next week. Here, let's take a look. And what do you see? Price has ran right into, of course, the 6-month volume profile. What we're looking at here is an initial move to the 50-day with a potential move right back up in here to the supply zone. Now, if you're new to the show and you're saying, what's the supply zone? Well, it's where people buy and sell at. And you can see very clearly buyers come down here and sellers are up here. We can go back over the last 2 years and you can see there's been buying and selling in this zone. Now this turned into buyers looking to perhaps take this up here to the 2-year high. Let's look over the last 10 days. You see buying underneath here ahead of what are going to be smaller company earnings. So this is giving you some confidence here that when you see a flip in momentum to actually take a position there. With the small caps, again, this is something you can do as a trade. You can do it with your bigger assets. Everyone in the 401k usually has a small cap position. We too will add a position and track it once we see a flip in momentum here. How about the energy sector? A lot of people have crammed into that momentum now, flipping negative just for the day though. But look at this, for over a 1, 3, and 6 month position, we run momentum over multiple time scales and you can see it's extended. Machine positioning on the slow side, very long the market. What do we note here is we're seeing a slowdown in momentum. Let's take a look at XLE as we're looking at a potential here retest of the all-time high, but you're noticing momentum is slowing down in a big way. Here's XLE. Let's take a look. And notably, look at the MACD. It's slowing down. Look at the RSI. It went from overbought and now it's slowing down. The question is, does it have enough juice to get it back up here to the all-time highs, or is it about to roll over? This is one, if you're in it, raise your stop loss levels up. Do yourself a favor. Don't get too greedy here trying to get a breakout. If we look back over the last, say, 10 years, you can see energy sector really high. When this thing eventually breaks, it comes down very quickly. Again, that would be a big warning sign. Energy tends to tell us it's a late cycle issue, but it can break in a big way. Now, if you're looking for opportunity, one of the markets is bonds, and this is important because when we talk about your 401ks, a lot of people run, asset allocation models. They have 60% equities, 40% bonds, and what we're seeing is a position where the machines could be buying in almost every scenario. Now, we gave our subscribers, because we put videos out. When we get signals on reports, we make videos and show you how to trade and what we think about them. We told them about one bond position they could take advantage of in their 401ks. How about a second one? If you see momentum here start to flip with machine positioning, well, virtually everybody has a treasury position in their allocation. Take a look at this as a trade. Now, this is one of the ones we did without a stop loss. One point here was just back to positive. Now we're down 7.5%. But here's what we're looking at. Max short across the board on our fast algorithm and our slow algorithm. That's what, of course, Goldman is saying is there could be some buying here, and that's short covering. We'll give you the lead on that. And look at from a tactical basis. We've seen 20 consecutive days momentum time pro selling, max on the 1 month window. This is a huge opportunity. You see it sitting near oversold territory. MACD's near a negative cross. This is potential opportunity. We're going to hit our downside target a little bit lower. We dropped our upside target to the 21-day moving average. But keep in mind, you start to see these machines short covering, huge opportunity. You don't have to be a trader to take advantage of our reports. Again, that is the key here. And you get a 30-day free trial. But one thing we know, let's zoom in here over the last 30 days. And what do we see? Buyers and sellers are trying. You see, buyers are trying to come in here. Sellers keep driving it down. Let's look at the last 10 days, and we see it's still not there yet. It's still a little early for a trade here. I'd wait for the signals. Wait for this thing to close above perhaps this candlestick here. And this is the information that we give our subscribers in the videos. You know, it's sitting right near oversold territory. No one's looking at this, but those machines flip. Talk about a huge opportunity that could drive this from its current price around 88 up to 93, and then potentially even higher if we head into a recession. Let's take a look at gold. Well, we know 48 consecutive daily buy signals. Gold is high. It's looking perhaps to retest this all-time high if inflation resurges. You notice our fast algorithm selling down a little bit, but momentum is very, very strong here. It's in fact, this is as strong as it ever gets. You see max on his 1, 3, and 6 month window. This thing is out of control, and many people loving gold want to buy more of it, and that's what you see happening. You see this massive rally here, a little bit of a pullback, hence getting bought in a big way. Let's take a look at the 10-day volume profile. You see gold here absolutely being bought on the dip. Investors want gold and they want a lot more of it. This again, if you're looking for a deep value trade, this isn't one of them. If you're looking to add, of course, to your physical metals, that's an opportunity. As a trade, I'd probably hold off. But if you said, Steve, could I have made money trading gold? You could have, because we told you back in October of last year, both our CTA triggered at that low point. So did our Momentum Time Pro. They triggered on the same day, a pair trade. We love that. Now up 24.45% as of Friday. Look at this. $1,222.50 profit had you bought it. Total cost of the reports $550 a year. You talk about a huge opportunity. One trade pays for everything. While you're there, check out Burcon Neuroscience. We'll get to them here in a bit. Another big opportunity. And if you think the gold trade was amazing, look at gold miners. Now we got stopped out on this because I was a little tight on my stop loss levels, but we see our size at 64. This thing is still near overbought territory. MACD negative cross, but notably our Momentum Time Pro is telling you hold on to this trade a little bit more. We see upside target 36.26, downside target 32.50. Machine positioning here relatively long. But let's take a look at GDX here, because what we can note is it has a nice move. Down here is when we showed you when to buy this thing. I got stopped out here on one of these candlesticks. I kept the stop losses too tight. Those subscribers that didn't, man, they took off, and this thing is now either forming a double top or potentially looking to break out and retest the recent 2-year highs here right around 36.26. Now, if you think that gold trade was incredible, well, we think Burcon Neuroscience will be too. But look at this. Back on March 4th this year, you'd be up 24.39% on the trade. Our CTA Time Pro, here's the signals it generated. You can see it was max short on the slow side, buying on the fast side. And here we can note Momentum Time Pro flipped off of that sell signal. You paired the two together, and that gives you some early signals on when to buy this thing. You'd be up a ton right now, and we think you're going to be up a ton on Burcon Neuroscience. Hang tight on that, because here we've got agricultural commodities, another great trade that we put in on the report. And here's what we can see. Momentum is positive. This trade up 24.24%. That coming right off a pair trade on reports, just like we did with GDX and gold. Set the stop loss. We're raising that up right now. Can this go higher? Absolutely. How about soybeans? We think this is going to be a big trade, and we started put this out to our subscribers here not too long ago. Back on April 24th, this trade up 0.26%. Now you say, well, that's not very much. Well, it hasn't been on the books very long either, but we think the soybeans offering big opportunity. And this is the kind of information we give our subscribers. Here you can see we've got our stop loss level set at the low of this candlestick. Think we got to move up here into the supply zone, a retest where the sellers are at, with a potential breakout up here into the low $26 levels. But here you see a low, a higher low, and you see some volume coming here to push this higher. Tremendous opportunity. But what about the dollar? Well, this thing's got 30 consecutive daily buy signals. Like gold, it's nearly maxed out across the board. This is a warning sign that the dollar is overextended and looking to make a reversal. Let's take a look at the dollar trade. This could, of course, be really bullish for gold and U.S. equities. Here you can note it's running into resistance once, twice, 3 times. We'll zoom in here on the 10-day. What do you note? Sellers on the dollar. Of course, our subscribers who like to trade currencies, we've given you the edge on that as well, because we cover currencies in our reports. But let's talk about our sponsor for today's show, Burcon Neuroscience, because we think there is a huge opportunity. Again, you can find them on the TSX under symbol BU.TO, on the OTC under symbol BRNC. Links in the description below for everything. I'm going to show you an incredible chart set where you can make a potential quick 26% with a bigger potential for 78% return. Let's take a look, because they are a global leader in the development of plant-based proteins. And here you can see they were founded back in 1998. They've got over 20 years of plant protein innovation. And here you can see they've got best-in-class proteins in the soy, pea, canola, hemp, and sunflower space. They have unmatched purity, and they are just getting ready. They've launched their hemp back in July of 2023 as first proof point. We got an update on that for you. Why we believe this is going to drive big revenues, because they're going to start seeing that come in as they begin their sales from hemp this year. That is very exciting. And looking at their opportunity, they've proven pea, canola, soy, and at, of course, commercial scale, sunflower and hemp. They are ready to scale those up. This will drive more revenue, more profits, and potentially even their stock price higher. They've got 95% hemp seed protein isolate. This is the world's first. This is important. First to market high purity hemp seed protein isolate with a minimum 90% of protein. And this is a quick path to generating revenue between existing customer demand, their global network of customers, and their speed to market. This is fantastic. And it's got, more importantly, high margins, which is fantastic. Sunflower proteins coming. This is one of the best plant proteins in taste and color, and it's got compelling value propositioning. This is very exciting as we look forward to Burcon's innovation. And you can see they successfully scaled commercial production of 95% hemp seed protein isolate. This coming on March of 2024. They've achieved a significant milestone with a successful scale up of its groundbreaking hemp seed protein. This is big deal, and it's producing at 95% hemp seed protein isolate to fulfill initial customer orders right now. And this is a watershed moment for Burcon, and a testament to the dedication and expertise in our talented team. This from the CEO. With a capital light approach, we're rapidly bringing our next generation best-in-class proteins to the market, and we think that is going to be a big catalyst for their stock prices, as anticipated commercial sales and further production campaigns of their hemp seed protein are slated for the first half of this year, and that is due to growing customer demand. And you can look back, and what we can see is the stock has been slowly moving higher. And you notice had some jumps in here into the supply zone once, twice, 3 times. That would be your 26% move. It's sitting right above its 2-year volume profile. So over the last 2 years, buyers have been underneath here supporting the stock. Here you can see it's slowly moving higher. Momentum has been trending in a positive direction. Here we can see the MACD looking to make another move higher, drive the stock up. Now, a breakout of the supply zone here. You see this big volume move where sellers came in. A breakout there would send the stock up 78%. Again, on the TSX, on the symbol BU.TO, on the OTC, on the symbol BRCNF. Here you can see zoomed in on the 90-day chart, seeing right on that volume profile line, which is fantastic news. Over the last 90 days, buyers have been coming in here. They know about what Burcon's going to release, what it's going to be big news to the market. You're looking for a quick 26% move right into that supply zone, a bigger move. Break through those shorts. Now you're talking a potential 78% move on Burcon, something we're very excited about. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.